tonight here with Quest Trust Company. As you guys probably know, tonight was supposed to be the grand reopening of our Austin office there in Austin, Texas, but unfortunately, due to just safety concerns and in light of, keeping everyone as safe as we can, we did decide to move the case studies and presentations online virtually here tonight. So basically how tonight's event will work is I do have a couple of case studies for you guys. We've got some special guest speakers, and we do have some of our distinguished sponsors that would have been joining us at our grand opening event, joining us here tonight. So I hope you enjoyed tonight's presentation. Kind of as we let people get signed on here, I do just have a couple of quick announcements, kind of let you know a little bit about how tonight's event is going to run. Now, after we made this agenda, we did have a few changes a bit last minute today. We actually, unfortunately, Nathan is not able to join us here tonight, but I did call Jason Bible just before this. He's going to join us a little bit early before his time scheduled to speak. So once I get through my announcements here, Jason is actually going to come on and share his normal case study that he was going to share tonight, as well as a few other special tidbits for you guys. So you'll get some extra content from him tonight. If you guys don't know Jason Bible, he is a rock star. He's based out of Houston, Texas here, and he does quite a bit of real estate all throughout the state of Texas. After Jason's case study, we will have Tom Berry. Tom is a lender here in Houston with Investor Loan Source. And then we will do some voting tonight in true Quest fashion. We love to make these events fun and make our speakers kind of battle it out to see who has the best case study. So we'll have a way for you guys to vote here tonight. And then we did want to give our distinguished sponsors some time to get in front of you guys, let y'all know. Let y'all know about the services that they offer. So we have Blink Lending, Eckard Enterprises, and ILS joining us here tonight. Now, when we were going to have this event in person, we did have several other sponsors as well. A few of them have put together a few short videos for you guys, again, just to kind of let you know about the different services that they offer. And at Quest, something that we really always strive for is to get accessible information out there to you guys about real estate, self-directed IRAs, building wealth. And along with that, it is really important that you build up your power team as well. So definitely make sure to check out the different sponsors that we have here tonight. And I hope that overall that you enjoy tonight's event. Now, one thing that I did want to let you guys know, I know at a lot of these events, we are getting current clients joining us. We're getting new clients, we're getting current clients, people that have been coming to our events for years. So I did want to let you guys know that we do have a brand new revamped referral program for this year. You guys know, as a real estate investor, you get a lot of your business by word of mouth. And at Quest, it is exactly the same for us. So if you have friends, family, colleagues, anyone in your network that could benefit from having a self-directed IRA, actually have an awesome referral program. For any person that you refer to Quest, you will each get a $25 credit towards your accounts. And for more information about that, you can visit refer.questtrust.com. Again, that's refer.questtrust.com. And on that website, you can find all of that information as far as the current promotions for rewards, how you can let other people know about Quest, and you can actually put in your information there as well. And we'll have an IRA specialist reach out to you guys in less than 24 hours. Now, I did want to give just a quick tidbit about who is Quest before Jason signs on here. For those of you guys who might be new to Quest, we, at the core of our business, are a self-directed IRA custodian. So we teach investors how to utilize their old 401ks or IRAs to invest into non-traditional assets outside of the stock market. 98% of Americans only have their retirement accounts invested into publicly traded assets, things like the stock market, mutual funds, publicly traded securities. But at Quest, our clients use their IRAs to self-direct into privately held assets such as real estate, notes, private placements. And this is a really great way to not only diversify your retirement account, but also actually have more control over where your funds are invested. So Physically, we are based in Texas. We have offices in Houston, Austin, and Dallas, but we have clients all across the country. We operate in all 50 states. A lot of our processes can be completed completely online, and we have about $2 billion in assets under our management. Now, all of that $2 billion in assets under our management is all privately held assets that our clients have self-directed their IRAs into. So it gives you a lot of freedom. There are some rules that you want to be aware of, but reach out to an IRA specialist and we can certainly walk you through all of that. But I do have to give a disclaimer. Of course, at the beginning of every presentation, there's always a disclaimer. Please be aware that at Quest, we do not give tax, legal, or investment advice. We provide a lot of education. We put on a lot of presentations with a lot of guest speakers, but our role in these transactions is to fund the investment and to basically be the vehicle that allows you to hold these types of assets in your IRA account. So please do not rush into investments with people that you do not know, people that you have not vetted, and make sure that as you're going out there and you're investing in real estate and building up multiple streams of wealth, that you're taking the time to make sure that you are structuring deals properly and that you are working with the proper professionals for these deals. So really cannot stress that enough. And just to kind of get a little bit further into it, how we can help you here at Quest, this self-directed IRA that you're going to hear myself and all of our speakers talk about here tonight, to be completely honest, there is no legal distinction between the IRAs that we hold at Quest and an IRA that you might have at any other custodian. The only difference is the types of assets that your custodian allows you to invest in. So, there's a lot of different benefits to having a self-directed IRA. I personally think it's really important that you know where your money is sitting when you go to bed at night. If your money is all in the stock market, how much control do you actually have over where those funds are invested? Not a lot, right? So at Quest, we are extremely passionate about teaching our investors about all of these different concepts to help you diversify your retirement portfolio and also to shelter some of your real estate investments from your own income taxes and capital gains taxes each year. Not many people know this, but the growth from the investments in your IRA is reported totally separately to the IRS than your own personal income each year. So with IRAs, you have a really big potential here to shelter these investments from your own income taxes and capital gains taxes each year and actually have control over where that money is invested. So I do want to end off on this slide by letting you guys know that we want you to understand how this works, and we want you to understand how this applies to your personal situation, because we actually have 7 different types of accounts that can be self-directed at Quest. And we go through quite a bit of internal training for all of our IRA specialists. It usually takes a couple of years to fully train an IRA specialist. And the IRA specialist is the very first person that you are going to talk to. In a free one-on-one consultation, we're going to walk you through, do you have a 401k? Are you still employed there? Is it from a previous employer? Do you have a Roth IRA? Do you maybe have a health savings accounts? Our staff is trained to actually walk through all of these different scenarios and questions with you guys, again, so you can understand how these accounts work and really get the most out of them between you and your immediate family, no matter what you might be looking to invest in. So Jason should be signing on here in a few minutes, but I did want to kind of end off on these announcements with our current promotion that we have going on right now. Right now, through the end of the quarter, actually, we're giving away up to $500 in account credits. This is great for new clients as well as existing clients as well, because a lot of our current clients, they might, when they get started, only move over a chunk of their IRA account. A lot of our clients honestly keep accounts at both types of institutions and just transfer the cash back and forth between their IRAs based on where they're looking to invest it at any given time. So if you're a new client looking to get started at Quest, give us a call, send us an email. We'll help you get started. And depending on how much you're looking at moving over, you could earn up to $500 in account credits. Or if you are an existing client, reach out to our team. We are more than happy to help. And you can get some free account credits as well that could potentially pay for all, if not more, than your transaction fees for any upcoming investments that you might have with your account. So that's about all I have for my few announcements here, but I do just have a couple of minutes to kill before Jason signs on here. So I did want to let you guys know about our other upcoming events that we have going on right now. Now, the plan was to bring back our in person events, coming back strong this August. Obviously, right now, we did decide to move those online just due to safety precautions for our staff, all of our attendees, and our clients as well. So at this time, all of our webinars will remain online throughout the month of August. They might come back in person for September. I have not gotten a for sure answer on that just yet. But we will be continuing to host our webinars every Tuesday and Thursday at 12 p.m. Central Time. This will be a mix of internal education taught by people like myself or Nathan or maybe Wanda Shaw and some of our other IRA specialists that you guys might be familiar with. And we also have our self-directed IRA Saturday webinars. If you guys have not checked out Self-Directed IRA Saturday, these are the biggest webinars that we host. It's when we bring out our really big name speakers that we work with from all across the US. And my personal favorite, we also have our virtual networking happy hours. So at the virtual happy hours, you can meet other investors from all across the country. Whereas this event is actually set up as a Zoom webinar where you can only see us, you can only chat with us. The virtual happy hours are actually set up as a Zoom meeting. So everyone at the virtual happy hour gets a chance to share their cameras. They get a chance to introduce each other or introduce themselves to each other. And basically what we'll do is we will go down the list of attendees and everyone gets a chance to introduce themselves to the group. At the end of all of the 30 to 50 introductions, which it goes by pretty quickly, at the end of those introductions, we actually open it up at the end for conversations and we just kind of let people network from there. So it's a great event. At every happy hour. We get about 30 to 50 investors from all across the US. And it's been a great place to build a network and network with other IRA investors that are also doing these types of deals. So without further ado, I actually see that Jason has joined us. Jason, that was perfect timing. I actually just finished my announcements. And again, guys, if you're just now joining us, we did have to switch up the schedule just a little bit for tonight. So if you saw the agenda in the beginning, just ignore it. We're going to be going by my schedule here tonight. But Jason, I'm so happy you're able to join us here a little bit early. You'll have until about 7:15. So talk about whatever case studies you want to. For those of you guys that don't know Jason, he's based out of Houston, Texas. He runs the Texas Real Estate Investment Center. And you've really got some cool things going on out there. And I love that you have some whiskey on your desk. Cheers. It's about that time, right?
Yeah, it looks like you're back at the house, huh?
I am. Got my new home, not my new home office, but I've actually had the Quest backdrop in my office for almost a year and a half now. And I finally took it out. So I was like, I need some new decor. But yeah, thanks for joining us.
So yeah, thanks for having me on. I rushed over here, and then so I've got this is the Texas Real Estate Investment Center. This is my office here, and I just got back. I was out doing some networking. We're about to start planning a really big event. Haley, you know some of the stuff that we're going to do with you guys. But anyway, so I stuck back here, and Rob, my business partner, is not a big, whiskey kind of guy. But I was like, I looked over here in my cabinet, and I went over to his, and I stole some. So we're ready to get started early. So I'll do a case study for you guys, and I'll show you kind of some of the things that we've been doing over the last year. But ask any question. Like, we've got plenty of time today. At the Houston event, we didn't have as much time. So if you guys have got questions, go ahead and start putting it in the chat. My specialty is actually in data analytics and economics. I've got an undergrad in environmental science and chemistry and an MBA in finance, and I have another master's degree, but that's probably not germane to the conversation. So you'll have to forgive me. I'm still getting over COVID, so my voice goes out by the end of the day. So just give me 2 seconds here, and let me pull up. You guys can see all the stuff that's on my desktop here. where is my quest? I pulled it up earlier today. Here we go. So let me start the case study. Like I said, guys, y'all can ask me any question. I've got plenty of time here today, which is unusual. I usually run out of time. So I'll give you guys this little case study. This is my contact information in the bottom left-hand corner. You guys want to contact me, just hit that hit that QR code. It'll pull up all my stuff, my personal email, my Instagram, Facebook, my email list. It'll pull up everything, and you can contact me there. The last couple of months, I'll put these motivational quotes from time to time in my presentations. And one of the things we've been working on big time is personal growth and what that actually looks like. So one of the fascinating things to me is why people don't take action, why people do the things that they do. And it's led to this kind of personal and academic study on individuals' performance. And I'm convinced it's because most people don't really know who they are. Then they get into a relationship, a marriage, that sort of thing for a long time, and they don't know what the goals are for that relationship. And so I think you've got to start with yourself, and you've got to figure out what your ideals are. And like what Jordan Peterson says, what ideals really are is a judge. Ideals really lead who you're going to be as a person. And so I've got a couple of different quotes there, but the idea is if you really know who you are, then you can get a pretty good idea of where you want to go in life. And so in any case, that's one of my little sayings for the day. And I've said this now since October 2017. If you think real estate's expensive now, just wait. When I said that, everybody laughed. Jason, you understand, interest rates are going up, the market's going to crash. I've heard the market's going to crash since 2012. Market's going to crash, dude. You have no idea what you're talking about. I'm like, uh-huh. Yeah, the data tells a completely different story. So here's the cost of waiting. I love putting this out. The last month I have data for, the July report is not out yet. It should be in the next week or so. But as of June 2021, the median home price is $315,000. When I made that prediction back in October 2017, it's $226,000. This is for Houston, Texas, by the way. My portfolio is split between Houston and Corpus Christi. I have some stuff down in Surfside, but I kind of consider that Houston. There's been $80,000 in appreciation in less than 4 years. That's $20,000 a year. So if you were thinking about real estate in 2017 and haven't bought anything, it costs you $80,000 a house. So you can wait as long as you want. It's just going to get more expensive. All right, so this is what I did on COVID, my COVID vacation for the last 18 months. Who wants to buy a beach house? And when I was live in Houston, I made everybody say me. And I was like, we will not move on to the next slide until everybody gets really loud. Who wants to buy the next beach house? Or who wants to buy a beach house? Me. So I bought, I don't know, like 12 or 15 beach houses now. In fact, this beautiful house I'm closing on Thursday. Seller is closing on Friday. And it's a great deal. We're going to talk about this deal and how I got it. Now, don't get me wrong, I just bought it. But if I didn't do the things I did during the coronavirus shutdown, there's no way I would have gotten this deal. Like, it would have been impossible to get this deal. So I went down to a little place called Surfside, Texas. Now, even those of you who are in Houston, I totally expect for you not to know where Surfside, Texas is at. If you drive down 288 until literally hit the Gulf of Mexico, that's Surfside, Texas. It's just south of Freeport. So I went down there. I bought 4 houses on the same lot on a street called Thunder Road. Then I went on a tear. I bought a duplex on Fort Velasco. We bought another one on Oyster. We bought this one here on Texas. That's a duplex. I bought this one on Ocean. Here's the crazy thing about this one on Ocean. I paid $10,000 above lot value. It's 5 lots from the actual beach. That one should be done here in the next couple of weeks. We painted it a bright orange. So if you're driving down to Surfside, you see this beacon of orange light. That is that property. Bought another one on Crane. This one's been an Airbnb for us for over 12 months now. And then this is my favorite house on Rays Way. I have so many amazing memories here. It has a fireplace in it, which is kind of unique for a beach house. But I'll tell you why that's cool. If you're down there at the beach and it's a cool night, you can open all the windows up and have a fire going in your own house. It's absolutely amazing. It's 2 blocks from the beach. It's a really cool little house. So let me tell you the moral of the story. One of the biggest problems I see real estate investors do, especially in Houston and in Dallas, Fort Worth, not so much in Austin, but I certainly see it in other markets in Texas, is that they never really build a brand in their market. Now, I'll tell you right now, I go by Jason Bible, Mr. Texas Real Estate, but before I became, the czar of Texas real estate, I bought most of my houses and most of my flips in the energy corridor here in Houston. That's 77077. That's where I bought all my properties. And I absolutely own that marketplace. And then we built a business from there when we started buying a couple hundred houses a year. So I went down to Surfside, Texas. I bought that 4-unit, bought a couple other properties. And then I ran into David and Jen one day when I was down there actually in the middle of Corona. If you guys remember that, like March and April, nobody was traveling. So I essentially had all those beach houses to myself because no one was renting them. So I bring all my friends down and we literally had the entire beach to ourselves. There were days we would go to the beach and wouldn't see another human soul. It was absolutely insane. So one day I'm walking back from one of our beach houses and David and Jen and the previous owner of this property I'm about to show you were sitting there chatting. And I said, did you guys just buy this property? And they said, yes. And I said, you know what? This is my favorite house on the island. If you ever sell it, please call me. And I thought, there's no way in the world that they're going to call me about this particular house. So sure enough, you guys can see it. Here's the text message. So Taylor is my Airbnb manager. And she sends me a text message, May 19th, 5:55. Now, if you guys know what happens on the, I can't remember, this is the second, I always forget, second or third Wednesday of the month in Houston. It's the super investor meeting. So I'm at the super investor meeting, the Jet Lending super investor meeting. We're one of the big sponsors there. I speak for 15 or 20 minutes at every single meeting. So I'm about to go on stage and I get this text message. Hey, Jason, this guy approached me today at Ray's and asked for you by name. Says he wants to sell his house across the street and the A-frame because you've always loved it. So what happens is most real estate investors buy in different parts of the city, so they never really build this reputation. So down at Surfside, everybody knows who we are because we buy so much real estate down there. We're just huge fans of that market. So I got this message from David and Jen. And this is the property. It's 527 Beachfront Drive, Surfside, Texas. And that's the property on the right. It's that A-frame. We call it an A-frame because it's a triangle design. But really interesting property. Like when the tide comes up, the water literally sits at the bottom of those stairs. It is on the beach, Beautiful property. There's only a handful of properties in Surfside that are really that on the beach, if you will. So that's the view at low tide. Just let you take that in as I take a sip here. That's the view from the patio. I think the patio is actually bigger than the house. I don't know what you call it, deck, patio. But it's absolutely beautiful. That's the view from here. Now, what's funny is people say, is this South Padre or Florida? I'm like, no, the further you get away from New Orleans and through the Mississippi there, the clearer the water gets. So if you've ever been to Surfside before, there are days in Surfside where the water almost looks like Florida. Like it's absolutely crazy. And of course, South Padre Island is really nice, but it's really an amazing little place. And it's super, super shallow. So it's a great place for families because you literally have to go out 200 yards to where it really gets dangerous. But in any case, so that's that. Here's the inside. It's a 672 square foot house. Like it's not really big. It's almost like a tree house at the beach, like a fort at the beach. That's the view from the second story on the right there. That's obviously the view of the front of the house. So let's talk about it by the numbers. I'm paying $380,000 for it. I'm going to do about $5,000 to rehab. I'm going to upgrade the window units to mini splits. I'm going to do a couple other things. In fact, I just got a quote back from my window guy, and I might blow the budget, but I'm going to take out these doors here and reframe this and do all sliding doors. So they'll all slide to one side. So when you're inside, you can open all the kitchens on this first floor. So you can really open it up. But the number he just gave me was six G's plus framing. So I might blow the budget by, I don't know, $10,000. It doesn't really matter. As I'll show you by the numbers, it doesn't really matter. Purchase price $380,000, rehab $5,000. ARV's $436,000. This is a 672 square foot house. It's $650 a square foot based off the pending sales right now. So net cash flow, including debt service, is $4,800 a month. That's year round. That's an average number. And we already own Airbnbs down there. So I'm telling you that number is definitely within the ballpark. So we're going to make $4,800 a month. Our cash on cash is about 106%. Now, not a bad deal, however you determine what a big deal is. We're going to refi at 7 months. Why are we going to refi at 7 months? Because this property is appreciating almost 30% a year, and it's done so for the last couple of years. So I'm going to have enough equity in the property to refinance it and have no money in the deal. Now, my cash flow is going to drop to $4,300 a month. But if I wanted to, I could pay it off in 6 years. So just this alone, right? We could stop the case study. I know, because I like a lot of you guys, I've been to a million of these case studies and they're like, but wait, there's more. Like literally we could stop it right here. But there's some other interesting things. And that is when you get to $650 a square foot, it might be time to start building. We added 1,000 square feet. So here's what we got to do at the beach. I'd add 1,000 square feet, plus I would lift the property another 12 feet so that it would be level with the addition. I think I can do that for $200 a square foot. So $200,000. That would give me an ARV of 1.1 million. And because it's a larger property and it's on the beach, there are very few properties that big that are on the beach. In fact, I almost want to tell you there's none. There might be one or two, but they're virtually always booked up. So it's hard to figure out how many there actually are, but there's not that many. Our net cash flow, including debt service, would be $9,500 a month. And I would take $200,000 back at closing. We'd only be in for $580,000. Heck, if I can borrow 80% on this asset. So I could take $200,000 back at closing and debt service would be down. And of course, with debt service, we'd make about $9,500 a month. Just a crazy, crazy deal. But there's a lot of deals like that down there. The appreciation alone, especially when you start doing additions on small properties like this, you're able to recapture a lot of the cash that you got in the deal. And in fact, in this case, we're able to recapture our cash plus $200,000 at closing. So really insane deal. Here's what the property looks like. So what we'd actually do here, hopefully you guys can see my mouse, is that we'd build an addition here and we'd go back. So a couple of ideas of what that would look like. It would look something like this. But we would blow out the back side of the house just a little bit further to give us that full 1,000 square feet. In fact, what I thought about is, do we do a first floor and second floor addition, put the master on the second floor to make sure it's got a beach view? Like there's some really neat stuff that we can do. Like I said, our budget is $200 a square foot, which if you guys are building in Texas know, we got 100 a square foot margin there. We can do some really amazing things. And because the property is worth $650 a square foot, I mean, okay, so what if the budget blows out to $250 a square foot? Like, it doesn't matter. Like, it's getting, my business partner, Rob, and I have this discussion all day. He's like, I cannot believe. He goes, in Port Aransas, I can believe $1 million, 1,700 square foot house. But in Surfside, Texas, 1.1 million, 1,700 square feet, doesn't even make sense. It's like, I don't want to say it's quite like Malibu prices, but it's certainly Southern California prices. He's like, I just don't get it. And like, it doesn't even make sense to me. I'm like, well, that's what they're selling for. I mean, it's so great little deal here. Like I said, but wait, there's more. Here's where things get interesting. Because we bought so many houses down there, and our worst performing house, the value is up 50%. In fact, a lot of our beach houses have doubled in value in 3 years. So I'm going to sell all the properties, plus the other ones that you've not seen on this presentation in Surfside. I'm going to keep the 4 units on Thunder. I'm going to keep that A-frame. And we should be able to easily pay off the A-frame property plus the new construction. So we will owe nothing. I'll owe nothing on that property. That's the real magic of real estate. When people talk about real estate, oh, you can leverage. And the leverage is the sexy part of real estate. I'm like, no, it's not. Leverage is not the sexy part of real estate. The sexy part of real estate is the massive appreciation provided you're buying in the right place. Like, that's what's attractive. Let the real estate pay off other real estate. That's the magic. It's not the leverage. It's not the cash flow. It's not the taxes. It's not any of that stuff a guru is going to teach you. What's sexy about real estate, the actual ownership of real estate, is you get a large enough portfolio to where you sell a portion of the portfolio and pay off another portion. Like, that's the most amazing piece of this whole thing. And I never hear anybody talk about it, but it's absolutely amazing. So now here's the question. When I own that property free and clear, 1,700 square feet on the beach, worth 1.1 million, what's my net cash flow? 14 grand a month from one house. So when I run into all these real estate investors, they're like, Jason, I got to own like 1,000 units. I got to own like 600 units. I need 100 single family. I'm like, no, you don't. You just need to buy a handful of properties with no debt. Because here's the other reality. When does a real estate crash really affect real estate investors? It's when they owe debt. Anybody can pay the taxes and insurance and HOA and maintenance. It's the debt that kills you. It's the leverage that kills you. So if you own an asset like this, it's free and clear. You're making 14 grand a month from one house. Now, I don't recommend you retire from one house because there's some diversification. I mean, hurricane comes in. It's hard to get $20,000 a month in rental, in lease coverage from an insurance company. So this is a whole different discussion. However, can you own 5 or 6 of these? Can you own a dozen free and clear rentals in Houston, Texas, and then own a couple of beach houses in Port A and Surfside? I mean, that's a little bit reasonable portfolio mix. So this is us. We own the Texas Real Estate Investment Center. We bought this in the middle of COVID last year. Everybody told us we were crazy. I saved all the emails from everybody that told us we were crazy. We're at about 70% occupied. We bought the building vacant. We did a huge rehab on it. We have office space available if you guys want to come hang out with us. It's a great place. This is what we do on the Mr. Texas Real Estate team. I've got a handful of syndications that we've closed. We just closed our American Recovery Fund, which is returning 15% to our investors. And we have the Texas Appreciation Fund that we just opened. If you're an accredited investor, we ought to have a conversation. We're also active investors. So if you want to partner with us on syndications or on funds, we find deals for you guys. If you're a part of that mastermind group, it's super affordable. In fact, this month it's like $10,000. Like, it's super affordable to be a part of our group. And it's a group that takes action. It's really more of a work group than it is a mastermind. And if you guys are interested in the things we do, text active or passive to that number. And me or Rob actually call you back, by the way. People are always shocked, like, and Rob really does most of the phone calls. Rob will call and say, hey man, this is Rob. You wanted to meet about, passive investing. They're like, oh my God, I didn't think you would call. I'm like, our sales team is me and Rob. So if you guys are interested in joining our group, it's a really small group. We'll never get bigger than 250 families nationwide. So if you're interested in being part of that group, there's the number there. Haley, I guess it's time for you and I to chat. Are there any questions, comments, that sort of thing?
No questions that I can see here. No questions as of right now. So did you have any last kind of closing thoughts that you'd like to leave everyone with as they go out there and invest after this crazy year that we've had?
Yeah, you need to go out there and buy as much stuff as you can. Like just buy. It's you just can't buy enough real estate. And like you had said in an earlier webinar, it's like we've got all the metrics to say this market is just getting started. It's just getting started. So I highly recommend you guys buy as much as you can get your hands on. It really is an amazing market. I don't think you have to run across the country. Texas is absolutely incredible. So in any case, those are my parting words. If anybody else has any other questions or comments.
Awesome, Jason. Well, thanks for joining us tonight, and thanks for joining a little bit early. Definitely appreciate that. Guys, if you did not watch today's class that we hosted at 12 p.m., head on over to our YouTube channel after this webinar. Jason taught our webinar today over basically how to not get arrested when you're raising funds for private capital.
Don't go to jail. The SEC is putting people in jail finally. Small time guys, like they only raised a couple $1 million. The Security and Exchange Commission is finally putting those guys in jail. So we talked a lot about the common mistakes that real estate investors make when they're raising money. So.
Yeah. Awesome, Jason. Well, thanks for joining us. Go enjoy your drink. Cheers. And I'm sure we'll actually see you next Tuesday right here with a different case study at our Dallas online grand opening, which will be very similar to this. So.
All right. It's good to see you guys.
See ya. Awesome, guys. So I hope you enjoyed that case study. Jason always has a wealth of knowledge to offer, and it's kind of a perfect segue because as he's telling you guys, you need to go out there and buy real estate. If you need funding for your real estate deals, our next speaker is, a fantastic resource for you here as well. So next up, we have Tom Berry with Investor Loan Source. Tom is not only one of tonight's speakers for his case study, but he's actually one of our distinguished sponsors as well. So y'all will get to hear from him twice tonight. But Tom, the floor is yours for the next 15 minutes. Go ahead and take it away.
All right. Thank you very much, Haley. Can you hear me okay?
You can, yes.
Awesome. So my case study for tonight is going to be kind of brief, and then I'll just kind of dive into some of the things that we're seeing out there in the marketplace and ways that you can prevent mistakes from happening. Jason was talking about preventing jail from happening, which that would be great, right? Not to go to jail. Mine probably won't be that drastic, but I want to talk about mistakes that are made that lose you money in your IRAs, right? That's still pretty rough. It's maybe not jail rough, but still something that you certainly want to avoid. So we'll get into some of that as I go along too. So Investor Loan Source is the name of our company. We're based out of Houston, Texas. We are actually in the same office as Quest Trust at Park Row in Houston. And what we do is we lend money to real estate investors. So what does that actually mean? We do a little bit of what's called private lending. And like a hard money lender, we base our lending primarily on the asset itself, but we really look at the borrower and their experience as well. So we will lend to people that are going to do fix and flips, commercial development, redevelopment, construction, and even folks that are in the landlording business and building a portfolio of rental properties. Those are our clients, and those are the people that we directly lend to. We've been lending for 6.5 years now, done over 1,000 loans. And how the Quest folks can work with us, there are several ways, and I'll get into that at the end of my case study. So I want to do a case study here of somebody at Quest, and we'll call him Joe, that wanted to do some private lending, but Joe was not really experienced enough to go out and do all the due diligence on writing a loan directly to a real estate investor. He didn't feel comfortable with that. So he came to us and he said, look, I've got some money in my Quest Trust IRA and I want to invest it, but I don't want to go out and deal with Bob the investor. So we said, look, we have already lent to Bob the investor, and we have a particular loan here on a house that after repaired will be worth $175,000, and we lent $122,500, which is 70% of the after repair value. Why don't you lend that money to us, the $122,500, and we'll give you 9% rate of return on your money. And we will pay you, in other words, our company, Investor Loan Source, will pay you $918.75 in interest-only payments until the loan is paid off. This way, you don't have to take your money and go out and try to find a real estate investor that you trust, that has a deal that you like in an area that you would like to lend on, and then hope that their deal goes right and they pay you back and give you your principal at the end. So it's a way of using somebody in the middle to kind of offset some of your risk of private lending. So this worked out great for Joe, and he took us up on the deal. He lent us $122,500. We signed over the deed of trust to that property. That's called a collateral transfer of lien. And we gave him that paperwork. It's recorded at the county. So he's got collateral now. And our borrower paid us and we paid him for 5 months. This went around perfectly the way it's supposed to. But on month 6, our borrower didn't pay us their payment, but we still paid Joe. We still paid our $918.75. So we talked to our borrower, we worked with them, we tried everything to get them back on track and paying us to no avail. So month 7, we go to Joe and we said, look, we want to pay you your whole $122,500 back. We need that note back because we're going to take action. In other words, we need that deed of trust back because we're going to take action against our borrower. And so we were able to do that. We paid him back. He gave us that collateral back. And then we went after our investor in the legal system, and we dealt with that foreclosure and disposed of that property. So in this case, it was just a way for somebody that wants to be truly passive, but they know that private lending is still a good way to boost the yields in their IRA, and it's still a good asset class for them. It's a way for you to participate without having all the legwork that you would have if you were direct lending. The due diligence that we do for these loans, we actually printed one out a year or so ago. Every piece of paper in the file, we printed out, 3-hole punched it, and put it in a 3-ring binder, and it was almost 3 inches thick. So if you're out there doing private lending on your own and your due diligence folder is not 2 to 3 inches thick, there are probably things that you should be doing that you're not doing. And that's what I want to talk about when we wrap up here. So that is the end of my case study. It was not a sexy case study, but it was a situation where somebody had a really good ending to a bad situation in their IRA. Because if Joe had direct lent that money to our borrower, let's say, and that borrower stopped paying, the IRA then would have had to go after him and would have had to go through the foreclosure process. And then the IRA would have owned a property in it. So for some, that's okay. And, I've heard people say, well, yeah, but that's best case scenario because I might make more on it after foreclosing on it than I would have the other way. That is possible. And if you know how to handle a busted up, ugly house, then by all means, that may be the best route to go. But I know some people that are listening to this are sitting there going, I don't know how to handle a busted up, ugly house. I don't know what to do with that. I don't have contractors that I can call. I don't have a general contractor or plumbers and things that I can call. I just want to be passive with my IRA. If that's the case, and that describes you, then direct private lending may not be the right solution. But passive private lending through a professional company, somebody that does this on a day in and day out basis like we do, may be a better fit for you. So some of the things that I want to leave you with that would help you to not make sense. Let's say that you're sitting here going, okay, that was a cool story, Tom, but I still want to direct lend. Okay, I have some advice and some things for you that I have seen other people make mistakes. And I think if you can learn from their mistakes, that's better than making them yourself. So here are some of the things that I see in the direct private lending world that you may want to watch out for. First of all, always have a third-party opinion of value on a property that somebody is wanting you to lend on. Do not take the borrower's word for what they think this property is going to be worth at the end of the day, right? It may be correct and it may not be correct. I just had a very, very sophisticated borrower just a couple of weeks ago bring us a deal. And of course, we always ask, what do you think the after repaired value will be? And they told us. And we got several third-party opinions because the first one was way, way lower than what this professional investor thought it was going to be. And he wasn't happy with it. He said, oh, that's wrong. I'm right. And that appraisal is wrong. We had a second opinion. And then we had already done our in-house opinion. And no, we believe that this very sophisticated investor is wrong. And there were some things that he missed that are going to play poorly into the value of this property when it's fixed up. So even professionals, even people that do this on a day in and day out basis on an investment, on the investment side, are going to once in a while miss things. I know I certainly did. You know, when I was doing fix and flips myself, we lost our butts on a property that I thought for sure was going to sell for X, but it didn't, simply because I missed something. I missed something about that house. And we lost money on that particular deal. Our lender didn't. That came out of our pocket. But at the end of the day, we all can make mistakes. So don't take your borrower's word for what they think the value of that property is going to be. Get a third-party opinion of value. Now, what does that look like? The best is going to be an appraisal. The second best would be a broker's price opinion. But there is no third best. Don't just do comps. Don't just ask them for comps. Heaven forbid you ask the borrower for comps because they could cherry pick the comps and make it anything they want it to look like. Another thing that we see people make mistakes when they're direct lending with their IRA money is that they don't get professional opinions of construction cost. All right. The borrower comes to you and says, hey, I want to buy this house. It's 100 grand. I'm going to put 50 in it. So I'll be all in at 150 and it's going to be worth 230 when it's done. All right. Well, that sounds great. Boy, sounds like you got a great deal. I like the old Ronald Reagan model. Trust but verify, right? I trust you. Sounds great. And I trust you enough to verify all the facts. So whether this is a great deal that you presented me or not, it relies on two assumptions, doesn't it? The first assumption is that the house is going to be worth what you think it's going to be worth. And the second assumption is that it's only going to cost what you think it's going to cost to fix it up. So make sure that you verify both of those assumptions with some concrete bids on the construction side and an appraisal on the valuation side. And lastly, I want to leave you with this on tips for not losing money in your IRA. In the hypothetical of I'm going to buy the house for X and I need so much for repair money, never give that repair money to that investor until the repairs have been made. That is what's called an advance on future value of your property. So if I tell you, if I'm the borrower and I tell you that this house is going to be worth 200,000 when it's done, but I need to put 50 grand in it to get it worth 200 grand. And let's just assume hypothetically, you agreed to lend me all the money for the purchase and the rehab, and you hand me that 50 grand in cash at closing. I now could walk away with that 50 grand and not put it in your property. Well, now your house that you have as collateral for your IRA loan is not worth 200 grand. At best case scenario, it may be worth 100 or 90. And you've given me all that cash. Don't do that. I see it happen time and time again. People walk away with that cash. Here's the other thing that happens. You give them the cash before the repairs are done, and maybe you only give them an advance, okay? Air quotes, advance. Look, if they need an advance, they probably shouldn't be flipping that house, right? Because that means they have no backup cash. And if they have no backup cash, if their numbers are wrong and that rehab is going to cost more than 50,000, they don't have the cash to put into it. So you want to be doing loans with somebody that has the starting money. Let's say they've got 15 grand or 10 grand in the bank. That's enough to start that rehab on. Once they've exhausted that and those repairs have been made the way they should be made, then you can always give them a draw to reimburse them the money that they've put in. They can use that money to do it again. Once those repairs are done, you give them another advance until they've exhausted the whole 50 grand and until the house is done. Make sure that when you are doing these draws that you verify that the repairs are done and that they're done correctly. You want to use a third party if you're not somebody that is capable of knowing that by walking through a house. Use a third party to walk through that house and make sure that the repairs that they are making pass code, pass inspections. And at the end of the day, you will have a house that is worth the 200 grand that you think it's going to be worth when it's done. Because if the work is shoddy, or if things aren't done to code and the city shuts the property down and red tags the property, now your collateral isn't worth near what you've advanced to this particular borrower. So I hope those things will help you in not losing money in your IRA. But if you don't want to learn all the things that you need to do the due diligence for direct private lending, just know that you can work with professional companies like ours, and there's others out there that you can work with as well, that will allow you to participate with them in the lending process. And quite honestly, you can make almost as much doing that as if you had to do all the legwork and all the work of finding the deal, finding the borrower, and doing the 2 to 3 inches of due diligence necessary to get your IRA money into a good solid loan. So hopefully that is helpful for you. And if you want to reach out to us, I didn't have slides for this, and I apologize for that. But if you would like to reach out to us for more information, we're very easy to find at www.ils.cash. And if you've got any questions or comments for me on anything that I've said, feel free to get a hold of me at tom@ils.cash. tom@ils.cash. Thank you very much, Haley. I'll kick it back to you.
Awesome, Tom. Thank you so much for joining us here tonight. It's always a joy to have you here. I don't think we have any questions. The only question we had was someone definitely wanted your website and information. But guys, be sure to stay tuned because Tom will get an additional 5 minutes for his distinguished sponsor introduction here in just a little bit. But before we do that, in true Quest fashion, you guys know when we host these case study events, you know that we like to make it a contest and have people vote. So for all of our attendees out there, whip out your phone, scan this QR code, and I actually have a Google Doc pulled up right now. Obviously, Nathan wasn't able to join us tonight, but we're gonna make Jason and Tom battle it out to see who has the best case study tonight. Which presentation did you guys like? So whip out your phone. Let me make sure this QR code works as it's supposed to. And yep, if you guys can start voting, I can see a few of them coming in right now. But whoops. I am terrible at multitasking, you guys. But be sure to cast your votes. I'd love to hear which ones that you guys are enjoying tonight. It's a 50-50 shot for both of our speakers. But without further ado, I'd like to go ahead and bring on Amanda Kay with Eckard Enterprises. Eckard Enterprises was one of our distinguished sponsors for all of these events in Houston, Austin, and Dallas. It's a great relationship for us. So, Amanda, it's great to have you here tonight. Go ahead and take 5 minutes, introduce yourself, and let everyone know what you guys do.
Hi, thank you so much. So my name is Amanda Kay. I work for Eckard Land and Acquisition, or Eckard Enterprises. I've been there for about 2 years now, and what we do is we are a real estate company, or we're an energy asset management company that focuses on energy real estate assets. So we do mineral rights. And so Troy Eckard is obviously the owner, the founder of the company. He's been in the industry for over 35 years, about 36 years now. He's had the same phone number for that entire time. And what we really pride ourselves on is over that entire time of the 36 years of experience in there, he's really had a lot of what it takes to understand every aspect of the industry. He's created the second largest pipeline in the Gulf, which is actually in Houston, Connecticut Energy. He has a tank fabrication company. We have a transportation company. We focus on mineral rights. And so he's got a lot of the knowledge and the background that goes into picking the right assets. And so one of the things a lot of our partners do is they do traditional real estate. They have multifamily, they have residential real estate. And so they think that that's a form of diversifying outside of the market, which it absolutely is. It's a great form of diversifying outside of the market. Troy himself invests in real estate. But a lot of things that people miss is the diversity within the real estate market itself. So you have the traditional, you have residential, you have multifamily, you have commercial. But a lot of times what people don't understand is the mineral side of it can offset a lot of the types of downturns and fluctuations in the traditional real estate market. And so what we're finding a lot of our partners doing is trying to figure out when is the right time to, you can 1031 into minerals, to go into something that's going to make sense for your portfolio, that's going to keep with that same understanding of the real estate market. You get the monthly payments, you get the appreciation in the asset, but you don't have liability. So one of the best things about minerals, we focus in Oklahoma. You don't have property taxes. You get the depreciation allowance on your annual income. You can 1031 it. You can invest it inside of your IRA. You don't have those liabilities. You know, in February, we had that huge storm here in Texas. And I was renting at the time, having a house built, and I didn't break the storm. 7 pipes in my house broke. And then the owner of the property had to replace all 7 of the pipes, had to tear out the drywall, I had to get all new plumbing in my bathroom and in my kitchen. And then I had a leak from where my washer and dryer was. A lot of our partners are starting to say, I don't want to do those liabilities anymore. I like the income. I like the appreciation. Where can I park this now that real estate's at a high and have less liabilities? And so that's what we do for our minerals. We've actually partnered pretty strongly with Quest, and we find them to be one of the best IRA companies to work with as far as putting our minerals inside it. They're very, very helpful as far as, you know, the transparency in the process, getting things going, moving along. And so we really appreciate working with them. But something that we're finding, excuse me, is with the oil and gas industry, the supply and demand as far as it's going, we simply don't have the supply to keep up with the demand. So even though COVID is starting to peak again, you're not seeing the slowdown as far as people wanting to travel. Driving wise, so prices are starting to increase. We were at -40 this time last year. We're at 68, above 68. We can anticipate 70 to 75 a barrel between there. So you're getting the monthly income, and then the housing market's kind of going to a high. So Eckard Land and Acquisition, again, we're based in Allen, Texas. We're a branch from Eckard Enterprises, Troy Eckard. We have a partner conference every year. We're big on transparency. We want our partners to come and meet with each other. We want them to talk about their returns, talk about their investments, know each other, so that way they can see that it's not just us saying it. We averaged 17% last year on the lowest commodity pricing in history, and we're only increasing on that. And so if you ever want to get a hold of us, you can reach us at 972-884-5920, or I don't have a slide or anything for my information, but you can reach us at eckardenterprises.com and just fill out some information and find us there.
Awesome, Amanda. Thank you so much for joining us here tonight. And what was that phone number? Just one more time. I'm going to throw it in the chat for everyone.
Yeah, it's 972-884-5920.
5920. All right, perfect, guys. So that phone number is in the chat. Also, Eckard Enterprises. You can find them online as well as several of our other Quest webinars. So, Amanda, thank you for joining us tonight. We'll see you again next week as well, and we'll see you later.
Thank you.
Awesome, for sure. And look who's back, the one and only Tom Berry. Tom, that was a great case study. I'll let you guys in on a little hint. You're actually in the lead in the voting right now by a small margin. So must have said something right for everyone. But go ahead and take a few minutes and focus now on ILS, what you guys do, how you can help people out, your programs that you have. You guys have a lot of cool stuff going on over there.
Thank you. Thank you. So yeah, there are a lot of ways that I can work with a Quest Trust client. The first is we will do non-recourse loans for a Quest Trust IRA. Now, this is not something that we advertise because we don't want everybody wanting us to do these, but for Quest and Quest clients only, if you request a non-recourse loan, we will do that for your IRA. So how do we do it? There is obviously additional risk for us doing a non-recourse loan. And non-recourse simply means all we are holding as collateral is the property. And if that property, if your IRA doesn't pay us off and we have to foreclose on that property, we can't go after the IRA or you for the difference if there were a loss for ILS. So how we mitigate that extra risk, there's several ways lenders would mitigate that. The first would be to charge more for a non-recourse loan. And I really didn't want to do that. So I used the second option for risk mitigation, and that is just to lower the LTV standard. So if our normal loan with recourse, we would be willing to loan up to 70% of the value of a property. If you request a Quest Trust only non-recourse loan, we're just going to lend up to 65% of the LTV or loan to value. So by us reducing that LTV by 5 basis points, then it gives us the opportunity to lend to your IRA, and that will be an IRA compliant loan because we're not going to have a recourse provision in the loan. Now, other ways that we can work with Quest Trust clients, obviously, if you have a Quest Trust account that has money sitting in it that you need to get invested and active, we have multiple ways that you can work with us there. In the case study, obviously talked about the collateral transfer of lien, and that is one way that Quest Trust clients can work with us. The other way is we have 2 private equity funds, and I just asked my business partner, who is our CFO, last week when we did the Houston event, how much Quest money do we have invested right now at Investor Loan Source? And his best estimate was that around $18 million of Quest money we have in that. Most of that is in our private equity funds. So we have 2 funds. One is the growth fund and the other one is the income fund. And the growth fund has a target return of 10 to 12% to investor. And it is actually currently running 12 to 13%. So it's a little bit above target. And then the income fund has a target of 7 to 9 and is currently running in 10 to 10.5% range. Again, a little bit above target. What those funds, how those funds actually operate is when an investor sends their money into a fund, we take that money and we buy notes that Investor Loan Source has originated. And in the growth fund, what we're buying is fix and flip notes and commercial development notes. And then in the income fund, what we're buying is rental notes and owner finance notes, most of which that we have bought at a discount. So one is the construction product, that's the growth fund. So all of the notes in that fund are typically going to have a construction component to them. And then over in the income fund, those have no construction component to them. Those houses are already fixed up, they're already leased, they're already occupied in some way. So those are the two funds, and I highly recommend that somebody partake of both of them rather than putting all your eggs in one basket. We made the buy-ins on those funds very low, so somebody with a $100,000 account would be able to invest in both funds because the minimum investment is $50,000 on each fund. The lockup period is 12 months on each fund. And after 12 months with a 3-month or 90-day notice, you can take any or all of your principal back out. We actually pay our profits on these funds monthly. So every month, you're going to get your monthly checks, or your IRA is going to get your monthly profit checks, or you can obviously reinvest your profits if you don't need those funds at this moment. That is kind of an outline of the funds. I have to also say these are Exemption C funds, which means you do have to be an accredited investor by SEC definition to invest in those funds. But those are basically the I think 4 ways that I've outlined that we can help a Quest Trust client either needing money or having money that they need to get placed and working for them. Nobody likes lazy money, right? I heard one of the Quest folks last week say that about $350 million, I think, was the number they used, is sitting dormant at Quest, not actively invested. Now, that money is actually not making a return if it's not invested. So we don't like lazy money at Investor Loan Source. We want to get that money working for you and start helping you grow your wealth, which obviously is why you moved your money to Quest in the first place. So if there's anything that you have heard that you think we could help you with, just reach out to us. My personal email is tom@ils.cash. Or if you're interested in the funds or investing in the collateral transfers that I mentioned, you can also reach out at invest@ils.cash. And my colleague, Alex Peacock, will be the person that will reach back out to you and get you all the appropriate legal information that we need to provide you before you make a decision like that. So thank you very much for listening. And Haley, back to you.
Awesome. Thanks, Tom. And I did want to let you know you are tonight's winner. I mean, everyone's a winner tonight, but you won by 2 votes. So great job. You get invited back next week. So you're not voted off the island. Just kidding. Awesome, Tom. Well, thanks for joining us here tonight. Give me one moment, guys. Let me go ahead and get my screen shared again. So I do have a little surprise for you guys. So as you heard me in the beginning of tonight's presentation, we do have our rewards for deposits promotion going on through the end of this quarter. It was supposed to end in July, but we did extend it for the entire quarter through the end of September as well. And you guys know me, I do a lot of the webinars, I do a lot of the marketing, and I'm heavily involved in our content that we are putting out there with Quest. I do actually have one of our IRA specialists, Steve, actually based out of our Austin office. So you guys would have gotten to meet him in person tonight, but I do have Steve online with me here tonight. And Steve can be a great point of contact for you guys if you are looking at getting started at Quest and moving some funds over. Now, Steve, I don't even know if you know that I'm doing this, but guys, we've got a lot of you online right now, and I know some of you are very interested in getting started. I did actually get approval to waive 5 account opening fees tonight. Steve, go ahead and introduce yourself, and I'm going to plug your Calendly link. Guys, if you want to open an account without any account opening fee, it'll save you some money there. You need to schedule a consultation through Steve's Calendly link. And when you guys meet, be sure to mention tonight's event. I can do that for 5 people. So Steve, go ahead and introduce yourself. I'll stop talking and I'll get this information sent here in the chat.
Great. Thank you, Haley. So as Haley mentioned, my name is Steve Sabaji, and I work out of the office in Austin. We are sorry that we could not meet you in person tonight, but we do look forward to hosting events in the very near future. And we are, still somewhat open. So if you would like to come in and have a one-on-one, we certainly are available for that at this time. But again, we're looking forward to having everyone back live. And I'm looking forward to having some conversations with you. You got my link in there. All right. Thanks, Haley.
Awesome. Thanks, Steve, for joining us tonight. And thanks for moderating. It's always so helpful when you guys are on in the background to answer questions. And if you guys have not gotten a chance to meet Steve yet, and you're either looking to open an IRA, or if you have investors that are investing with you, looking for someone to walk them through the whole process, Steve can be a great point of contact. Make sure to schedule that consultation through his Calendly link, and you'll get your account opening fee waived if you are one of the first 5 people to do that here tonight. So that is all that I have for you guys. I did want to take a second to give our other vendors a really quick shout out. We worked really, really hard to put these grand opening events together for you guys. And I'm so sad that they couldn't happen, but we've got to do it safe for everyone. So I did just want to take a second to highlight our other distinguished sponsor that was not able to make it here tonight. If you guys have kids, this time of night, not ideal sometimes, right? So Paul with Blink Lending, you can find them at blinklending.com. They are another fantastic lender here in Houston. And you guys will notice that a lot of our vendors for this event did happen to be lenders. There is not a shortage of money out there, you guys. So make sure to connect with our different vendors, our different speakers that we had here tonight. And to kind of wrap up the night, I do just have a couple of short videos from our other vendors that would have had tables at tonight's event. So give me one moment. Let me get my screen shared again, and let me go ahead and play this for you guys. Hopefully the audio comes through okay. And we'll be back in just a few minutes.
Why do people use Jet Lending to fund their real estate investments? Is it just for the speed? Is it the 100% financing options? Is it the asset-based long-term programs, the commercial programs, the anything to do with investment real estate programs? Is it our free real estate analysis, our free education videos, the way we can do everything online? At Jet Lending, you will have a dedicated team to help educate, comp, evaluate, and estimate your deal within 24 hours to give you the support, dedication, and expertise you need to get your next investments done with confidence. Do you still wonder why people use Jet Lending? Come aboard and find out. Jet Lending, your fast and friendly asset-based lender since 2004.
All right. Oh, there I am. All right, guys. So thank you so much for joining us here tonight. I hope you all enjoyed the case studies, and be sure to join us next again, we'll send a few emails about that. And since the events are now online, you can now join all of our remaining grand opening events, which is really just one. It's our Dallas event. It'll be next Tuesday, August 17th. And we will have brand new case studies, a few different vendors for you guys. So be sure to join us. We're always happy to provide this education. And we do still have 1 or 2 spaces open for waiving those account opening fees. If you guys are able to, if you're interested, be sure to schedule a time to talk to Steve through his Calendly link. And we can't wait to see all of you guys in person again soon. I hope you all have a great night. Stay safe out there, and we'll see you soon. If we can help you in any way, let us know, and we're more than happy to help. Y'all have a great night.